All right, we're live. What is going on? What's up, Andrew?
Hey, good morning. Good morning.
I'm still kind of surprised people ask questions like, "Hey, are you guys brothers?" Well, what do you think?
Well,
Yeah, you got the
cousins, cousins possibly.
you got the hair genes, man. You got lucky. You got the genetic lottery from that angle. I got the other lottery though. All
If
right,
you
let's
say
do
so.
this. Let's do this show, man. We're doing the best debt negotiation tactic. This is a big giveaway. This is an industry insider secret. So tell people what you do at the office at Total Debt Freedom, just so they know what's going on here and what we're going to talk about.
Well, essentially, we're talking about what's the best tactic in order to negotiate the best possible settlement or lowest possible settlement, depending on how you want to phrase it. Now, obviously, we have many different factors that we use that we try to not manipulate, but try to utilize on our client's behalf. And in this show, we're going to talk about probably the most beneficial one and give some pointers and some tips on how to potentially utilize that in your favor.
Absolutely, and I'm just dropping the link here in the chat as you were talking about that. So let them have it, man. What's the deal? What's the most important
So,
thing people got to consider when they're trying to reduce their debt?
the biggest thing and the most important factor in our point of view is leveraging the best time of the month to enter into your discussions with the other party. So, depending on who exactly you owe the money to and who is attempting to collect that money from you, and when I say who, I mean, is it a collection agency? Is it a bank? Is it a law firm? Depending on which one of those three options it might be, you got some leverage in those negotiations. So first and foremost, when it comes to banks, banks generally don't have the types of targets where they're forced to want to get money through their door by the end of a particular cycle. So by the end of the month, they're not as focused and they're not as determined to get some money through the door by the 30th or the 31st of the month. So when you're negotiating with a bank, it's not as important. You can negotiate throughout the month at any point in the month, and it doesn't really have that much bearing. But on the flip side, if you're talking to a collection agency who's attempting to collect the money, it is certainly the best time to reach out to them near the end of the month. Depending on how much information needs to be relayed back and forth, depending on how low your offer is, and depending on how much information the bank, or sorry, the collection agency is going to ask of you to send to the bank for consideration of your offer, will determine when you're going to actually first approach the collection agency to start your negotiations. I always say it's probably a good idea to leave about a week's time from start to finish. So if you're looking to wrap it up by the 30th of the month, it would probably be a good idea to reach out to them sometime around the 23rd of the month to start your talks, to start your negotiations, and to start the exchange of paperwork or whatever it is that you're going to be exchanging in order to get the facilitated result by the end of the month, which the collection agency will certainly want, and that you're certainly hoping to leverage.
Yeah, man, there's so much to cover on this topic. What's the difference between, like, how does somebody identify, like the general public, how do they identify whether it's a bank or a collection agency? Because a lot of time that's confusing for people.
Well, there's two factors that you can really look into take into consideration. First one is when was the last time you made a payment on the account? Most banks write off, and I put write off into quotes. It's an inside term meaning that the bank has decided to forgive. Sorry, not forgive. They've decided to seek a tax relief from the government, and in order to do so, they have to say that they've attempted to collect the debt. They've been unsuccessful. It's gone through the internal collection cycle. They haven't recovered the money. So that is known as the write-off period. So if it's been more than 6 months, the probability of it being at a collection agency is extremely high. Probably around 80 to 90% is where the chances are being at a collection agency. So that's your first determining factor. How long has it been since I've paid them? More than 6 months, likely a collection agency. Less than 6 months, more likely to be still with the bank that you owe the money to. So that's your first thing. The next thing is it's probable that at some point in the communication, if it's with a collection agency, you will have some kind of communication from that agency. The collection agency is required to notify you in writing that they are assigned the product to collect. They have to outline what the product does, or sorry, what the product is, my mistake, how much you owe on that product, and they usually give you some kind of time frame as to when you are to reach out to them to make restitution. So that communication will be a letter in the mail. It can be an email if they have your email address on file. And on top of that, they're going to be calling you. If you've left a contact number, which almost always is the case, the collection agency will be calling that contact number regularly to reach out to you, leave you a message, get you on the telephone, and advise you that your Visa product is with their collection agency for collection. So those are your two important things: is communication. You'll see where it's coming from, so which collection agency is working on it, and then the time frame. 6 months or less is the bank. 6 months or more is with a collection agency, more often than not.
All right. And, we said that we were going to give, the most important tip. And I think Andrew gave it as far as timing, because that's definitely the most technical tip. But I'm going to add to that and give you guys an extra bonus today. We can give you a lot of bonuses today, actually.
It's Christmas. It's Christmas.
Christmas is here. It's the holidays, man. It's the holidays. I'm going to say mindset shift is probably, from my perspective anyway, the most important thing to approach eliminating debt with a settlement approach, meaning negotiating. Everything in life is in a negotiation. You can truly get what you want if you know what you're doing. And you approach it with the right attitude. And from my experience, most people that have debt are plugged into society's lies about it. Just make the minimum monthly payment. There's no other way out. Just keep doing what you're doing, you silly pleb. And at some point, things will be okay for you. They want you to think that you have more money than you actually have. They want you to think that you're wealthier than you actually are. They want you to think that as long as you just, tick off that little box in the bottom and just make your minimum monthly payment, that at some point in the very near future, you're going to have eliminated that debt. But it's a comforting lie. And comforting lies sell very, very well. People love comforting lies a lot more than the uncomfortable truth, and they drink that stuff like it's going out of style. It's like Kool-Aid, man. They get drunk on it. So I think if you take a look at debt from a simple, pragmatic approach of is what I'm doing working, meaning, and I would define working by is what you're doing paying down what you owe in a reasonable period of time. I'd say within 2 years, 2 to 3 years. If what you're doing is going to pay it off within a couple of years, then just carry on. Okay, you've got a plan. Looks like things are going in the right direction. At some point, there's a light at the end of the tunnel. Let's just put it that way. But if what you're doing is not working, and all you're doing is you're just throwing good money after bad, because the way that they structure the repayment schedule, which is hidden in the fine print, which Andrew and I have read, but most people never see in their entire lives, they apply payments towards penalties, fees, interest, and everything else before it even comes close to hitting the principal amount. And the way the payments are structured, they can take, we see on certain statements as much as 60, 80, 100. Like, we've seen statements that basically say that you're going to be 136 years old by the time you pay this off, right? And people don't look for that. They don't see it. They don't figure it out. So you have to change your mindset, to the approach of, I can get out of debt, and this does work. It's a feasible approach. It is legal. It is right. I have the right to do it. I have the right to take control of my own finances, and take control of my financial situation, my future, my wealth, and my family's wealth, and where that's going to go, and control my life and unplug from their lies, because they want you broke. They want you on the perpetual merry-go-round of debt. They want you spinning your wheels, because that's where you are a profitable customer. I'm not a profitable customer to banks and credit card companies. I'm the real deadbeat, because I use my credit card, I pay it off in full every single month, I collect my points, and I fly around for free my points, and I buy certain things with them, all sort of stuff. I'm the real deadbeat to the credit card companies. The profitable customers are the ones that are sleepwalking through life, saying, I'll just do what they say because that's good. And again, if what you're doing ain't working, if what you're doing ain't paying down the balance, if what you're doing is going to keep you in this perpetual cycle for a decade, 2 decades, 3 decades, and just work it out. Just look at what you're paying. And if you're not seeing the balances come down, that's where you're at. Hate to tell you, that's where you're at. So approach it from the mindset of unplugging from the BS and saying there has got to be a better way to do this. And I'll tell you right now, if it's not what you're doing right now, and it's not that you're totally solvent, meaning you should consider something like bankruptcy because you owe like $500,000 and you have no income and there's nothing that you're ever going to do to get out of debt, then a settlement approach, negotiating a reduction in your credit card debt, taking back the reins and controlling your life is absolutely positively possible. Okay? Our office has been doing it since 2003. I don't even know how much debt we've settled to date. It's got to be well over hundreds of millions of dollars by now, right?
I haven't looked at that number in a while either myself, so I can't.
I mean, like the last time I worked
it
it out was like 2014, and it was well over $100 million, right? So we're talking a lot of money that's been reduced and eliminated for Canadian consumers. And again, this only works in Canada because this is the way that we do it. If you want to do it internationally, by the way,
the principles still are applicable. It's just that you need to know your local regulations and stipulations of the creditors of where you are.
right. So if you live somewhere else in the world, you're in the United States or something like that, I have a book on Amazon, and here I'll just grab the link and I'll drop it in the chat. It's like $10. Okay, it's on a Kindle. You don't even have to have a Kindle. You can just get the book and then get a Kindle reader on your tablet, on your laptop, on your desktop, on your phone, whatever. Just read it. It's not even long. It's less than 100 pages long. It's basically a pamphlet. It's a long pamphlet that I wrote back in 2010, 2011 that tells you exactly what we do in the office. Now, guess what, guys? It's going to be dressed in overalls and look like work. So if you do this yourself, be prepared to do it yourself. If you want to hire somebody to do it for you, then that's essentially what the company that I co-founded with Andrew way back in the day. I mean, I started back in 2003. Andrew's now the licensed legal professional. He runs the show every day. You know, if you want to get somebody to do it for you, and again, it's Canadian debt, there's a ticker down in the bottom over here. Okay, you can get it legally reduced by 50 to 70%, and you'll get out of debt anywhere from 2 to 4 years, right? All you got to do is go to the website, totaldebtfreedom.ca, fill out the form. Andrew's got senior debt consultants that have been with the company for ages that know exactly what to look for, what's a good fit and what's not. And if it's not a good fit for you, they'll send you off in another direction. The beauty of it all is, even if you hire somebody to do it, if you've got 50 grand in credit card debt, the total cost of you eliminating the debt, hiring professionals like Andrews and the other colleagues he has in the office, is less than what you owe right now. So if you keep doing what you're doing right now, you're paying $50,000. You know, if you owe $50,000 and you're making these Mickey Mouse payments to them, and you're not seeing the balances come down, you're not seeing a light at the end of the tunnel. You don't see like a 2-3 year window where this is going to get paid off. Then you can hire a guy like Andrew in the office, licensed legal professional. It's been doing it for almost 20 years now. Get them to do it for you. Okay, it's got to be Canadian debt though. So if you live in the U.S., get the book. You know, you can do it yourself. There's other companies to look at in the U.S. Some people often ask me, who do I recommend? I'd probably still say freedomdebtrelief.com. I think that's Andrew Hauser's company. Was that the name of it?
I know his name was Andrew because it was the same as my name. I can't remember the name of his business.
Yeah, so you can check them out if you want to hire a company in the U.S. They have a different set of regulations and rules and all that stuff. So that's really the long and short of it, guys. You don't need to expend your time, energy, and financial resources and give it away over 20, 30, 40, 50. Like I've said, we've seen people that had a repayment schedule that would have far exceeded any human lifespan we've ever seen.
180 years is the longest I've seen on a statement. 180 years, which is more than 2 life cycles for sure, and approaching 3 life cycles. That's how long it would take that individual to pay off that credit card. And just to give you an example for the viewers, while Richard was talking, I did a quick calculation on my iPhone. A $10,000 debt requires minimum payments of $200 per month. So if you're paying your minimum of $200 per month on that $10,000 debt, that is fine. You're keeping your minimum payments up to date. But the interest on that product at 19.99%, which is a common interest rate for almost every credit card.
And that's low, by the way. There's retail store credit cards which are around 29%. Some are as high as 35%. But sorry, carry on.
Yeah, so at 20%, which is the norm, you're looking at interest at about $170 per month. So if there's no over limit fees on your card, and if there's no late fees on your card, then all you're doing is putting $30 per month towards your principal of $10,000. You can do the math and figure out how long it will take you to pay off $10,000 with only $30 of it going towards the principal amount. That's why this merry-go-round of debt exists, is because the banks want you to stay into debt. They make all their money from people that are in debt, and that's exactly what Richard was just speaking of. That's your statistical example of that. $10,000, $200 per month as your minimum payment. 170 of it goes to interest. $30 goes towards what you owe. That's it. $30.
Yeah. And that's assuming that you don't make any further mistakes. So they don't apply concepts like universal default to your debt. That's another way that they've been screwing people too, as well as, you might be paying at 19.99%, but if you're dealing with a creditor that applies the concept of universal default to the contractual arrangement that you sign, which I believe they can unilaterally change just by sending, certain things, to the mail and to you, and you have to agree with it, and you continue on making the payments. But they've got ways around it. But all that really means is, if you screw up with one creditor, but you're maintaining payments on another, they can unilaterally change your interest rate from 19% to one that they feel is commensurate with your credit risk. It could be 28%, 29%. It could be whatever that contractual arrangement that their legal team thinks that they are able to, get away with. This is something that's been going around in the States for a long time. Canadian creditors adopted this. I don't know when it was. I mean, I started to notice it about a decade, maybe 12 or 13 years ago. But there's a lot of things in the code in the matrix that people don't see when it comes to credit card debt. So, basically wrapping it up on this note, if you're carrying debt, and again, the balance is not going down, you thinking that throwing money at that is basically you focusing on the most insignificant thing in the world. It's like where you live, your house is burning down, like wherever you live, house, apartment, whatever it is burning down to the ground, and you're worried about the fire department screwing your prize rose garden up. Like you're worried about the hoses and the water and their big boots and all that sort of stuff destroying your prize rose garden. That's really what it is when you focus on the wrong thing. Focus on dealing with the debt. That's the problem. That's probably the most important thing that you got to consider. Anyway, on that note, we'll have more shows like this. You guys see us every Saturday morning at 9 a.m. You can leave a comment below if you have a topic suggestion. Otherwise, Andrew and I just sort of chop it up during the week and see what's going on in the office. And, we turn that into a topic for you guys to consume. And again, if you need to grab my DIY guy, it's on Amazon. I dropped the link in the live chat. Or just search for the title of the book. It's kind of a silly title, but this was before I figured out writing books on Amazon. I tell it, enough is enough. The DIY debt settlement guide your creditors don't want you to know about. And essentially that's what it is. So if you search for this on Amazon, you will find it. It is available as a Kindle. Go check it out. All right, let's wrap it up on that note. You got any closing thoughts, Andrew?
No, that's it. We'll reach back out next Saturday and do another show.
All right, next Saturday.